Hey everyone, welcome back to the channel. In today's video, I'm going to break down 5 stocks that I'm personally buying in May 2025. And I'll walk you through each one with real numbers, current share price and revenue so you can make more informed investing decision. 2025 has been quite a ride. AI breakout, market volatility, and shifting global trends. In the middle of all this, I see some clear opportunities worth grabbing right now. If you are new here, I'm Jay. I talk about investing strategy and how to build long-term wealth through smart research stock picks. Let's get into it. First up is Nvidia. At the time of this video, the stock is trading at 114.5. The company continues to show strong year-over-year revenue growth and maintain a healthy balance sheet with more cash than debt, which is always a positive sign. So why is Nvidia still at the top of my buy list? Nvidia is essentially the backbone of the AI revolution. Their powerful H100 and B100 GPU are driving breakthrough across the board, from OpenAI ChatGPT to Tesla full self-driving system. Tech giants like Meta, Amazon, Microsoft, and Google are buying Nvidia chips by the truckload. Now, some investors argue that the stock looks overvalued based on discounted cash flow models, but here's my take. Traditional valuation models often fall short during periods of disruptive innovation. Look at Amazon in the early 2000s. It looks expensive on paper for years, but those who wait for a fair price miss out on massive gains. Nvidia has a strong competitive moat, exclusive industrial partnership, a powerful software ecosystem, and now a growing AI cloud service offering. They are also expanding into AI network and even custom ARM-based CPU, directly challenging Intel and AMD. In the short term, some might be cautious due to the valuation, but long-term investors who believe in the future of AI, Nvidia isn't just a strong buy, it could be the stock to own. The second stock will be Alphabet, Google. The current share price is 164. Let's break this down. Alphabet is the parent company of some of the most powerful platforms on the internet. Google Search, YouTube, Google Cloud, Android, and the Google Play Store. That kind of diversification gives it an incredible strong economy mode. In Q4 2024 alone, they pulled in nearly 100 billion in revenue, larger than GDP of some countries. What's more impressive is that this growth is still accelerating, especially in their Google Cloud division, which saw nearly 26% revenue growth year over year. That division alone is a sleeping giant. As businesses continue to merge to cloud services and AI-based infrastructure, Google Cloud is becoming a serious competitor to Amazon Web Service. And guess what? It's finally profitable. But the real cash cow remain Google Search and YouTube. These two continue to drive ad revenue. YouTube is also a direct rival to Netflix and TikTok. And now with short monetization rolling out, it's becoming a more powerful revenue driver than people realize. You are essentially getting a dominant global tech company with free cash flow in tens of billions at a discount. And don't overlook their AI effort from Google DeepMind to Gemini AI and AI integrated search. Alphabet is doubling down on AI integrated across all of their services. That could unlock major upside in the next 3 to 5 years. Bottom line, Alphabet offer diversification in tech exposure, strong growth, and an undervalued price tag. For long-term investor, it's checked all the boxes in terms of growth, profitability, innovation, and margin of safety. The third stock will be Palantir Technology. Current share price is 124.28. Let's talk about Palantir, one of the most controversial yet compatible tech stock on the market today. Palantir offer in the data analysis and AI-driven decision-making space. They build platform for government agency for defense and intelligence, and also for private sector company for operation and forecasting. The 2024, they introduced an artificial intelligence platform, a platform that integrated large language model into enterprise and government workflow. This is a cutting edge stuff. Essentially, Palantir is turning enterprise AI into a plug and play solution. And that is why the US Army, Department of Defense, and major corporations are their clients. Now, here's the catch. From a valuation perspective, Palantir looks overvalued. So, why am I still buying? Because growth stock doesn't trade on today's value, it trades on future potential. So here's the bottom line. Palantir is a high risk, high reward play. If AI and big data analytics continue to blow, Palantir could become the backbone of enterprise AI system. And in that case, its valuation today might not seem so crazy in hindsight. If you are an investor who can stomach volatility, AI is a bold but rewarding bet. The fourth stock will be the SPY. The current share price is 566. Let's talk about why SPY remain one of the smartest core holdings for long-term investors. This ETF gives you exposure to the 500 largest public traded companies in the United States across every sector: tech, healthcare, finance, energy, consumer staple, and more. It includes giants like Apple, Microsoft, Nvidia, Amazon, and Google, all in one simple low cost package. So instead of trying to pick individual winners and losers, SPY let you bet on the long term growth of the United States economy as a whole. And historical, it has been a winning bet. Over the past 30 years, the S&P 500 has delivered an average annual returns of more than 10%. Even through recession, crashes, and global crises, SPY has recovered and grown. Now in 2025, with AI infrastructure spending and reshoring of US manufacturing driving innovation and growth, I believe the S&P 500 still has a lot of upside. SPY reflect that entire wave. Another reason I'm buying is because it's stable and low risk. If you are someone who wants to consistently compound without needing to monitor earning report every quarter, SPY is perfect. You are not just buying one company, you are buying the market. It's also a great leverage if you are holding high growth name like Palantir or Nvidia. SPY helps smooth out portfolio volatility. The bottom line, SPY is like the foundation of a house. It's not flashy, but it's strong, stable, and effective. If you are building a long-term portfolio, whether you are just starting out or already deep in the game, SPY should be one of your core position. Now I'll be talking about the fifth stock, which is Visa. The current share price is 347. Visa is a global payment titan. Every time someone swipe, tap, or enter their card number online, there's a good chance that Visa is taking a cut of that transaction. They don't issue card or take on credit risk like a bank. They just move money, and they do it better and more secure than almost anyone else. In 2024, Visa handled over 14 trillion in payment volume globally, and they are expanding aggressively in emerging markets like the Southeast Asia and Africa. These are regions where digital payments are still in the early stages, and Visa is positioning itself as a default infrastructure. Even though it's trading at a premium to its intrinsic value, here's what keep me bullish. Visa generate huge free cash flow margin, often over 50%. It has virtually no debt, an A plus credit rating, and a rock solid balance sheet. It consistently buy back shares and raises dividend, great for long-term compounding. Also, think about where the world is going. Cash is dying, whether it's Apple Pay, Google Wallet, or peer-to-peer transfer. All of these innovations still run on Visa. Visa get paid whether it's a credit card swipe or a phone tap. And let's not forget, Visa is also making moves into the crypto infrastructure where it could open new growth stream in the next decade. So here's the bottom line. Even if Visa is currently overvalued by traditional valuation model, it's one of the most dependable compounder in the market. It benefits from global economy growth, rising digital adoption, and an unbeatable network effect. For me, Visa is the kind of stock you can buy and forget, and 10 years from now, you'll be glad you held on to it. To recap, here are the 5 stocks that I'm buying this May and why they are on my radar. The first one, Nvidia, the undisputed leader in the AI revolution, posting 3-digit revenue growth and showing no sign of slowing down. Alphabet, Google, a tech powerhouse with strong performance in search, YouTube, and cloud. Plus, it's trading below the intrinsic value, offering solid upside. Palantir, yes, it's overvalued by traditional metrics, but it's also a high conviction play on the future enterprise of AI and data analysis. Next, the SPY. If you want long-term exposure to the entire US economy with less volatility, SPY is a foundation ETF that belongs in any portfolio. The last one will be Visa, a global leader in the digital payment, quietly compounding returns with massive free cash flow and strong growth, even if the valuation is rich. Final thoughts. These picks reflect a mixture of growth, stability, and forward-looking potential. But as always, investing comes with risk. Prices can be volatile, valuation can shift, and even great companies can underperform in the short term. So please do your own research. Everyone's need to understand their own individual goals and risk tolerance. If you find this breakdown helpful, give this video a thumbs up, subscribe for more research-based investing insight, and let me know in the comments what stock are you buying this May. I'd love to hear your thoughts. Thanks for watching. Stay smart with your money, and I'll see you in the next video. As always, until next time, trade smart and stay profitable.